All right, welcome back, everybody. I am excited to, go into this week and just have another good week. Last week was a really good week for me trading, and it was mainly because I followed all of the rules. I did what I was supposed to do, um, and typically that's what happened. You have some discipline, have some patience, and you stick to your rules. Typically you're going to get something at least, you should at least be break even, right? If you have a good strategy and you're following your rules, you should at the bare minimum be break even, all right? So we're going to be doing a little bit of back testing today in this video, looking at last week's price action, and maybe I can, be of service to some of you guys who maybe struggled last week. Um, that's pretty much the goal for this video, right? So we're going to be back testing all the way up until the market opens, which is at I believe it opens at what, 5 or 6 today, right? I think it's 6, might be 6 p.m. right? So be sure to drop a like on this video, you guys. You guys already know the routine. Drop a like, subscribe to the channel, and check out the links in the description below if you guys want to support me by using any of my codes, or any of my sign up links. You guys know I am affiliated with EA Markets, Alpha Capital, Trade Day, Tradeify, right? FTMO, FundedNext, right? Affiliated with a bunch of people, right? But we're not really here to talk about that. We're mostly here to go over the back testing, right? So I'm going to be jumping from the chart that I actually use, which is this chart right here. And that's because, right, this chart has all of, the gaps and everything that I use, but I'm also going to be using this chart right here. Where's my chart at? I think it's this one right here, right? And this is pretty much the same chart. I'm going to be using this chart as well, you guys. So because I want to show you guys essentially what I do every day, right? And how I was able to not only get funded, but I only need to make about 3,000 more to take a payout, right? So I'm really looking forward to this week. I really want to be locked in this week, do everything I need to do to get this payout, because to be honest with you guys, it's been a long 2 months. I haven't had a payout this year, and it's been mostly all my fault. So if you guys can drop a like on this video, drop a comment, I would greatly appreciate that, and go ahead and sub up. All right, so first thing we're going to do, we're going to go to the daily time frame, all right? Because when I'm back testing, back testing, sometimes it's annoying. It takes so much time, but it's worth it. It truly is worth it, right? So the first thing I like to do is figure out, okay, we're on a daily time frame, so we know we don't have to go too far back. So I'm going to put a little line right there, just so I can keep up with everything and know where I'm at. And then I'm going to drop into the 4-hour chart. So this is the beginning of our week, right? This is the beginning of our week, and as you guys can see right off the rip, on a daily time frame, right, we had some lows down here, all right? And then this is just very simple stuff, you guys, very simple stuff. So I like to mark out all of my lows, right? I pretty much do the same thing on every time frame. And the reason why is because you guys can see right off the rip, notice how on a daily time frame, right, we had this swing low right here. Notice how these bodies did not close below this swing low, right? These bodies did not close below. So what is that telling us? That is telling us that, hey, we swept some liquidity, right? The market started to reverse a little bit, right? We broke above previous swing highs right here. So we know that, we have at least a little bit of a reversal, right, on the daily time frame. And then there's some things that we're respecting, right? So like on the 4-hour time frame, you guys know I talked about this little 4-hour gap. This gap right here is acting as a breakaway gap. And the reason why this gap is acting as a breakaway gap is not because it didn't touch it at all, right? That is not how ICT teaches breakaway gap. But the reason why this is acting as a breakaway gap is because none of these bodies are closing within this gap, right? None of these bodies are closing within the gap, and then it wasn't even able to get to the midpoint of that gap. So the reason why I'm pointing this out is because this is going to be a significant level for us to pay attention to this week, right? Obviously, we have some liquidity up here resting above here, and we know that, you know, like I just said, we closed above this liquidity that was at the swing low on the daily time frame, and then we started to reverse a little bit, right? And then these 3 candles right here, these 3 red candles, right? This is going to make an order block. So as long as price holds this order block right there, these 3 red candles, price could potentially start to go up. But as you guys can already see, right, we had this 1 4-hour candle close below the midpoint. So that already is telling me that we're likely going to want to go lower and sweep the rest of this liquidity out, right? But we just don't know how it's going to do it. We don't know when it's going to do it. But essentially, that is how I use gaps, right? That is how I use any gap in the market. That is one thing that I learned from ICT, and it took my trading to the next level, right? It's just knowing how the candles are closing within these gaps. That is going to give you so much information, just knowing that alone, right? I had to watch a million ICT videos before I realized this, because, you know, ICT, he do all of this fancy stuff. He got all of these fancy terminology and all of this cool stuff, right? I'm not hating on him. Great guy. But one thing I wish he would have just said in every video was, no matter what gap you're using, one of the key things you want to pay attention to is how these candles are closing within these gaps, right? So that's why, you know, I was able to take a good sale last Friday. And, you know, well, actually last Friday I took a buy, right? But let's not get too distracted, all right? So we are still on a 4-hour time frame. So I want to divide these days up, because as we go into, you know, these days, I want to be able to easily show you guys what I'm looking for, right? So we got right there. So that's about the end of Monday right there. Then we have the end of Tuesday is right there. Wednesday, Thursday, and Friday, right? So now we have our days divided, right? And because we have our days divided, this is going to make it a lot easier for us to backtest, right? This is going to make it a lot easier for us to backtest. So I'm going to, first let me delete this, because I'm going to pretty much show you guys what I do every day. It's a very simple strategy. I literally just got funded with E8 Markets and Alpha Capital, just doing this very simple thing, right? And I got funded with E8 Markets in 1 day. I passed my phase 2 and my phase 1 within 1 week with Alpha Capital, right? So this strategy really works, and I'm going to get a payout with this strategy. So I want you guys to really, you know, if you guys are struggling to get funded, if you guys are struggling to pass your phases, that's okay, right? That's why I'm here to make this video, to help you guys out. So all I do is I go to the 1-hour time frame every time, right? So let's say this is our Monday, right? Everything within this little zone right here is Monday's price action, right? Everything within this zone right here is Monday's price action. So the only thing I do is I mark out the swing lows and the swing high, right? So I'm going to unlock this, right? And let's put this on the 8 a.m. candle, right? Actually, let's go to the 7 a.m. candle right here. Then I'm going to lock that in, right? So every day I go on the hourly time frame, I find the swing lows and the swing highs, and I mark them out. You don't really have to go too far back. All you have to do is find the swing lows and the swing highs. That's it, right? And I'll mark them out. So pretty much anything that's in that little area is what I'm going to be looking for, right? Anything that's in that area is what I'm going to be looking for. So my chart will typically look something like this. And if you guys, if you guys ever come to my live streams, when I'm able to like stream live, you guys know this is how my chart start to look, right? I use yellow lines so I can see everything clear as day. And then all you have to do from here is figure out what level, right? Where's the liquidity, right? What is the market doing? Where is the liquidity? Well, as you guys can see right here, because this is how you build narrative. So as you guys can see right here, we have a swing low. Price comes down here. Monday morning, 3 a.m. Sweeps that low, right? Hourly candle close below. Sweeps the low, right? And then it closed back above. So the moment we see this candle close back above, that should already start to tell you that it's becoming very bullish, right? And this is pretty much how you read price action. This is how you read price action. Because if price is going to stay bearish, more than likely it's not going to come back above the swing low that was swiped, right? This little swing low right here, and close back above. Right? I'll give you guys another example. Let's go to Tuesday price action. Before we even get into Monday, right? Because I just want to show you guys more examples on how you guys should be using this hourly time frame to find the lows and the highs, right? Let's put this candle right here. We're going to put this, I'm sorry, not this candle, but we're going to put this vertical line on the 8 a.m. candle. Same thing, right? Stick to the plan. And then I can move this one over a little bit as well, right? So now we're looking at Tuesday's price action. This is the same thing. I'm going to show you guys the same thing. This is essentially how you find your bias. This is how you find the direction in which the market is going to go. It's all you have to do. All right? I know it may sound too good to be true, but trust me, you guys. I've studied ICT concepts. And I wish that, he would have just made it simple, but it's okay, right? I mean, he can only do so much, right? Same thing, right? So now we're in Tuesday's price action, which means what? We're looking at everything that's inside of these two vertical lines right here. This is the price action that we're looking at. So obviously, if our vertical line is on an 8 a.m. candle, our opening price is going to be right here, right? This is our opening price. So the only thing we have to do is what? Find swing lows, find swing highs, right? So obviously, if our opening price is right here, the only thing we have to go off of is this most previous swing low right here. And then we have this swing high up here. All right? That's it. So you notice right here, what did the market do? It took out this swing low and it rejected. This is a swing failure. And what a swing failure means, it just essentially means the market took out a swing low or a swing high, and the body of this candle, right, the candle that swept that liquidity, this little red candle right here, the body of this candle, look at the body, right? Not the wicks, the body closed above. So what is that going to tell us? That's going to tell us what? That the market is likely to go up. Because this happens right at what? 10 a.m. This is why it's so important to wait for that candle to close at 9:30, right, when the market first opened, wait 30 minutes for that candle to close. It's going to give you so much information. It's going to give you so much information, right? And we can then, right, once we get this candle to close, let me show you guys what I do next. This is all very simple. I haven't even got into no propulsion blocks and all of this fancy stuff. There's nothing wrong with any of that stuff. But you guys have to first know how to spot liquidity, and then you have to know how to pick a direction, right? So right here, this is where we was just at. You can go to the 5-minute time frame, right? You can go to the 1 minute, you can go to the 2 minute, you can go to the 3 minute. It don't really matter what time frame you go to, but you have to go to a lower time frame and find something that makes sense for a trade, right? That's all you have to do. So on the 1 minute time frame, this is where everything starts to get really technical. So in a 1 minute time frame, once you see this happen, notice what time it is. Now it's about, right, so 9:30 was about, let me see. So let's find our 9:30. All right, so we're gonna put a vertical line at 9:25. Right, so you guys know what I like to use. I like to use the what? The first presented fair value gap. So we have one here, or I'm sorry, not one, but we have, this is our first presented fair value gap. Let me show you guys what I boxed up. I boxed up this gap right here. Technically, it would have been this smaller gap, but based on how ICT teaches it, he always tell you use the bigger gap, right? So when 9:30 open, right, let's say, obviously, we're being disciplined, right? We're funded now. We're being disciplined. We don't want to do anything stupid. We want to wait for the market. We want to wait for that 1 hour candle to close. All right, so this line right here, I'm going to make it pink. This is the 10 o'clock. This is when that 1 hour candle is going to close. So now you know down here, we have liquidity that's our target, right? This can be our target now. So now after all of this choppy stuff happened for the first 30 minutes, now you can go in here and find a trade because you know what the market is respecting. But look how choppy all of this is, right? Look how choppy all of this is. Right, so maybe you don't feel comfortable trading this. But me, how I would have traded it, you have to use the first presented fair value gap, right? So if you're going to be using the first presented fair value gap in this example, your stop loss has to be up here. All right, you don't try to be fancy and get the extra tight stop. Your stop loss have to at least be above the most previous swing high. And here's some other information you can use, right? Notice this gap right here on the 1 minute time frame. Notice this gap right here. This is what? This is the breakaway gap. What's up, Alex? What's up, Alex? What's up, Lee, in the chat? Nice to see y'all in the chat. But look, this is a breakaway gap. Notice how price did come up here, but it failed to get up here and it rejected, right? This is why it's so important to wait that first 30 minutes because that's how you avoid getting tricked out. And then after you wait that first 30 minutes, when this candle closed at 10, now you have a better sense of where the market wants to go based on all of this information, right? We have a breakaway gap right here. We have the first presented fair value gap holding price down. So all we have to do is wait until 10 to find our trade, right? And then, you know, let's say even if we get in all the way down here, stop loss have to still be all the way up here somewhere. Maybe we don't get a perfect entry. And then right there, right, you can find a little small trade. So obviously this day, it wasn't the easiest day to trade because if you don't find the right, stop loss, look how many times it came back up right here. Gave you profits, came back up. Gave you profits, came back up. So that's why I said sometimes you have to use different time frames. Let's see how it look on the 2-minute time frame. This is stuff that I know people don't do. People don't never check the 2-minute time frame. They don't never check the 3-minute time frame. Right? And then they wonder why they're struggling, right? So here's another way you could have taken the trade. Right? If you wanted better risk to reward, if you see that on the 1 minute, right, it was respecting that breakaway gap, and then you also see that this first presented fair value gap, look at how the bodies are closing on the 2-minute time frame. Right? The bodies started closing below the midpoint, and then it started to get so weak that the bodies barely even wanted to touch the lower area of this first presented fair value gap. Which means what? If you don't like your risk to reward on that trade, because remember I said you would have had to have it all the way up here. Now on a 2-minute chart, it looks a little bit better because we see an order block that's holding price down. Then we see another order block that's holding price down. And I always teach and tell you guys, whenever y'all see multiple order blocks like that, I always refer to the one that's higher. So maybe if you would have been smart enough to use the 2-minute, time frame, you could have, put your stop loss at the midpoint right there, and then still targeting this low. Now it's a little bit better, right? Now it's at least it's a 2-to-1 risk to reward. But y'all know my rules. I'm only going for 3-to-1 risk to reward ratio. So I probably would have missed this trade, but I'm just trying to show you guys how you guys can set up the narrative to start finding trades, right? So let's go back to the 1 hour time frame. All right, because I think Tuesday, let me see. Let's go back to the 1 hour. And then actually I want to go back one last time. We're gonna look at the 3-minute, because I also want to show you guys, even if you didn't take that sell going into the liquidity, notice how on the 3-minute time frame, right? And look how it looks so much cleaner on the 3-minute. This is why you have to check all the time frames, because now that this order block look a lot cleaner, right? I would have still had to use this one just to have a safe stop loss, right? But now this looks a lot cleaner. And then worst come to worst, if you got in super late and I'm looking at the 3-minute time frame, right as this market is dropping off, this is another way that you could possibly take this trade. You just get in right as it's dropping off, you put your stop loss at the top of this breakaway gap, and then you could target it like that as well. And notice how doing that gives you a 4-to-1 risk to reward ratio. So notice how it's all the same trade. It's all the same trade idea, right? What's more important than the risk to reward ratio is knowing how to use ICT concepts, knowing how to read the price, right? Because if you didn't look at the 3-minute time frame this day, you would have never seen that these bodies, look how these bodies are closing below this first presented fair value gap. That's giving you a lot of information. That's pretty much telling you that the market is getting ready to drop off. So maybe, you put one entry in up here with this as your stop loss, and then you give it some time, right? And then right as the market is dropping off, maybe you can add another entry in. If you want to be extra safe, you could put your stop loss up here, right? It's not the same risk to reward, but as soon as it starts to drop off, right, I wouldn't mind even if you caught it all the way down here, right? Because like, let's say you had to wait for that candle to close. That's just something that I'm used to doing though. Right, so let's stay on track. All right, we're back testing. Then even if you would have missed that entire sell, what can you possibly do next? Well, right, this is our 11 o'clock close, and me, I like to be done at 11:30. Most days I like to be done at 11:30. Right, but you probably could have caught a buy as well, going right back up to do what? At least target this liquidity right here, and then target this liquidity right here, right? And let me point my arrow to where I was just swing high right here, swing high up here. Right, for the afternoon run on liquidity, you see that it swept that liquidity that we was looking at on the 1 hour, right? You waited to see how the market was going to start respecting it. This breakaway gap that was once a breakaway gap when it was going down, notice how it still respected this gap one last time, gave it a little baby pullback, and then eventually we shot off, right? We shot up, and we are on a 3-minute time frame right now. So, you know, you could also find a trade right there, but you have to use your Fibonacci tool at this point. And you have to wait for this market to come back into a discount. Right? So on the 3-minute time frame, like I said, if you're not on the 3-minute time frame, you're going to miss this trade. But notice how these bodies are closing. Remember, I said that, you guys. This is one of the most important things that ICT teaches. Right? When you're using gaps, this is one of the most important things when you're using gaps. I don't care. It's not, everybody think it's just all about a higher time frame gap or something like that. Higher time frame gaps definitely do matter, but understanding how the bodies are closing on these gaps, that's the real sauce. Right? Because after, you know, it sweeps liquidity down here, where this yellow line was at, it starts to reverse, give us a big green candle going up. Do that mean we just jump in the trade? No. We're not just jumping in the trade right off the rip, right? We need more information. So price comes down, it hits this, you know, line one time, closes all the way above. It hits this fair value gap one time on a 3-minute time frame, closes above. Hits it twice, close above. Hits it 3 times, close above. Right? And then when it hit it right here for the 3rd time, notice how it swept this low right here. What do you think about ICT Silver Bullet? That's like literally what we're talking about right now. Right? I think so like for me personally, you might have just came in. So this blue line, this blue gap up here, this was, you know, in this example that I was giving out, this was the first presented fair value gap. Because some people don't know that the silver bullet is just the first presented fair value gap. That's all it is. If I take you guys to the chart that I actually use, you know, for those of you who have been rocking with me, y'all already know. But if I take y'all to the chart that I already use, every sky blue box that's on my chart is the first presented fair value gap. Right? I deleted a lot of them, so you don't really see many of them anymore. But that is one of the PD arrays that I tell people to leave on their charts for as long as you can. You're never going to know the significance of the first presented fair value gap unless you leave it on your chart. Right? So the first presented fair value gap is extremely important. It's very powerful. All right? So that was Tuesday's price action. All right? That was Tuesday's price action. Now we're going to go and do the same thing. You guys notice I'm not switching anything around. I just gave y'all 2 examples using the same strategy on ways that you can figure out where the market is going to go, because the ideal is to wait for that 1 hour candle to close. So from 9 to 10, you shouldn't be taking the trade. I know a lot. We all like PW. We all like a lot of these guys. And look, it's nothing wrong with that. If you're one of those guys who can trade really well when the market open, kudos to you. But for me, in my experience, it's a struggle, right? Trying to trade as soon as the market open, it's just not even worth it. right? You need to wait for more information. A lot of you guys, the reason why y'all can't get past y'all phase and the reason why you're stuck in break-even mode is because you don't know how to be patient and wait for information. Some of the times when I take a trade, I'm going straight into profits. The reason why a lot of you guys are getting into trades and then it's like consolidating around is because you're not waiting for information. When that's fine, we all have to go through that. I went through it. Right? That's why I'm here trying to help as many people out. So now we're going to look at Wednesday's price action. All right. So I'm going to put this on the 8 a.m. candle right here. Well, it's already on the 8 a.m. candle. And then I'm going to put this one on 4 p.m. Right, so we can even just move this. So now we're going to look at Wednesday's price action. Is it necessary to know how to use order blocks and breaker blocks? No, I'm just going to be honest with you. It's not. You know, I haven't used the breaker block in forever. Now, order blocks is definitely, you have to know how to understand order blocks. That's something you need to understand, especially when they're clustered up together. I'm going to try to find you an example of when they're clustered up together, right? I'll try to find you an example. Right, so on the 1 hour time frame. Let me see. I'm trying to find you a good example. So like right here, right? I know ICT, he'll probably hate me for teaching it like this, but it is what it is. I'm just going to be real with you guys. All of these are order blocks on the 1 hour. This green candle is an order block. This green candle is an order block. These two green candles, order blocks, right? When they're clustered up like this, I always tell people this. You have to use the highest one. So if the market is going down, you want to use the highest one. If the market is going up, you want to use the lowest one for your stop loss, right? So obviously you don't want to try to trade, choppy price action like that anyways. But if you were trading it, your stop loss will have to be at the top like this, right? You have to use that highest one, right? And notice when the market decided to reverse and sweep liquidity, what did it go for? It went for the highest one. That's when you know it's over, right? But obviously you don't want to try to trade this anyways, right? Sometimes it's good to know this, but you don't really want to trade all of this anyways, to be honest with you. All right, the examples I'm showing you guys, it's not going to be consolidation. All right, so let's look at Wednesday's price action. Same thing, you guys. Wednesday come around, we on the hourly time frame. What are we looking for? We're looking for swing lows and swing highs, right? So we know that this vertical line right here, I'm sorry, let me remove this one. So we know that the first blue vertical line is on the 8 a.m. candle. So what do? We find our swing lows, right? We got one right there. We got one right there. And then we will have to look back a little bit. And then we have a swing high up here, right? And then we also have a swing high right there, right? So let me point to the ones I just marked out. I put a line on this swing high. I put a line on this swing high. I put a line on this swing low. And I put a line on that swing low. That's it. That's all we have to do. And then from there, what are we looking for? Same thing. I'm going to remove some of this off. Right? We're just trying to see what is the market doing, right? Sometimes you have to look back, but not too far back to understand what's going on. So if we know that when price came down here and swept this low, the body closed above. So what does that mean? That's a swing failure. The body closed above, and then it gave us the retest. All three of these candles right here, let me zoom in, because he was just talking about order blocks. All three of these red candles right there is what? That's an order block. All three of these make one order block. Price came down here and respected, so we know price is going up, right? So on Wednesday, when the market opened, same thing, right? We want to have discipline. So what do? We got to wait for that candle to close. Then we can drop into the lower time frames to see what's going to happen, all right? So let's drop it to the lower time frame. So now we have our bias, which is what? Price is going up. We had a swing failure. Price retested, hit the order block. Now it's going up. So it's no reason we should be taking the sell on Wednesday. It's no reason that we should be taking the sell. Right? Now the 1 minute don't look as clean. So when a 1 minute don't look as clean, what do you do next? You just keep going to all of the other lower time frames. Go to the 2 minute. This is what I do. People don't ever look at these lower time frames. Right? You'll never see nobody saying anything about the 2 minute or the 3 minute. They don't use it. Me, I like to use whichever one is the cleanest. So the 2 minute, it's all right, but let's see if we can get a little bit cleaner. Let's go to the 3 minute. The 3 minute is looking a lot better. I'm starting to see some potential breakaway gaps. All right, but I'm going to keep going. Let's see what the 4 minute is talking about. 4 minute is good enough, right? I can use the 4 minute. I can rock with the 4 minute. All right, so now we're going to go back to the 1 minute just to find our first presented fair value gap, because he was talking about the silver bullet, right? I use the silver bullet every day. Every day I use the silver bullet. All right, so the first presented fair value gap is the first fair value gap after 931, right? So we have to find our 930 candle. That's right here. And then the first presented fair value gap is going to be right there, right? So we're going to zoom in, and then we're going to box this up. I actually remember this day because I killed it this day. Right? Not even trying to brag or be funny, but I killed it this day. And I'm going to show you guys exactly what I did, because I did lose this day too. I did lose this day. So we boxed up our first presented, like I took a loss, but overall I was profitable. So we boxed up our first presented fair value gap. Right? Show you guys how we're going to use this. So the first thing I did, I remember this day vividly because I was actually on the 5 minute. I was using the 5 minute because I remember, where are we at? We got to find where we at. All right. I remember the first thing I wanted to do was I wanted to buy, because like I said, I was thinking buys on this day, and I wanted my buy to be something like this. And it was crazy because it worked out so perfectly, but I doubted myself. I was going to use this gap down here as a breakaway gap, right? And then we had liquidity right here on the 1 minute time frame, and this was supposed to be my trade, but I just didn't trust it. So I ended up taking a sell, and I took a loss. So after I took a sell, I realized I was doing stupid shit, and I got to follow the trend, right? So I did actually take another sell, I have to be honest, and I'm going to show you guys why. Essentially, I can even show you guys on this time frame. It would have looked a little bit better, but I just want to show you guys right here. That's already a 3-to-1. All right, that's already a 3-to-1, but I'm going to go back to the 1 minute because I need to show you guys this from the 1 minute, right? That's why I said I had to put lines on this, because I want to show you guys everything, how it looks in real time, right? And I want to show you guys why I took a loss in the first place. So I'm going to remove this, right? When I seen this big gap, I thought that the market was going to respect this gap. So I put my stop loss right down here. And at first I took a buy, and then, I got out for pretty much a small loss, right? I got out for a small loss, and then I waited, and I was supposed to take this buy off the sweep of liquidity, but I got too scared because the market was looking like it was starting to come down. I didn't know how much it wanted to come down. And notice what time it is. It's 9:45. So that's the reason why I was so scared, because I know that my system requires me to wait until after 10 a.m. So this day I was too excited. I had lack of discipline. But I remember I did catch this sell right here, right? Let me zoom in. Right, I did catch this sell. I remember I caught a wick entry on this sell because I was pretty much waiting for the market to come up there, sweep liquidity, caught a wick entry, and then I was in profits off of this sell. I was in profits about $1,000, and then after I seen that, we broke above the first presented fair value gap right here on Wednesday, right? So right here, this is why being able to read these candles is extremely important, because notice how these candles are closing right here. Price was holding it down for a while. Then right at 10 a.m., this is why I said we have to wait for 10 a.m. If a lot of y'all start waiting for 10 a.m., I guarantee you your win ratio is going to go up. I guarantee it. All right, so we get that close above right here. And then what? All we have to do now is find our range. So we can use the overall range, which is something that I always recommend. Right? From swing low on, this is the 1 minute time frame, to swing high. This is our overall range. Right? It's nothing wrong with if you use a smaller range like this as well, but just to be safe, always use the overall range. Always. Sometimes you will miss a trade using the overall range, but it's better to be safe than sorry. Right? And then notice how we came right down here into discount, where this yellow line is at. That's the 50% level. We came right into discount, which is also where? Which is also what? Right here. But what are these? These are order blocks. So, you know, you could have your stop loss like that. Let me see. You can have your stop loss right here on this order block, because you know if it breaks that order block, then you don't want to be in the trade anyways. Right? You wait for it to come into the discount zone. Maybe you don't get a perfect entry. Who cares, right? You get in late. Who cares? And then you try to go for a 1 to 3. And it gives it to you. Right? So this is why I said, a lot of you guys, if you guys just wait until 10 a.m., I'm telling you, your life is going to change. But and I know this from experience, because I struggle sometimes to wait until 10 a.m., bro. I get too excited, especially when I'm funded. I just be like, you know, I'm working, I'm on the road, I'm trucking. Sometimes I'll pull over. I don't even have enough break time. And I'm like, man, I wish I could just get this session over with. So, you know, I just start doing stupid shit. But if you really want to get a payout, if you really want to get funded, if you really want to change your life, you have to start being disciplined. Wait until that 10 a.m. Wait for that hour candle to close. It's going to give you so much information. So much information. Look how easy this trade was. And even though it's not respecting the first presented fair value gap perfectly, look at this gap right here. We can box this gap up. Right? It's respecting this gap. We got a gap down here. This gap should be able to tell you guys a lot. Look at how the price on this gap, look at how the candles hit this gap one time and then we're taking off. So that should automatically tell you, oh, we're going up. These bodies can't even close within this gap. That's why I said that's the ultimate sauce when it comes to using gaps. A lot of people, they think that fair value gaps is just a holy grail on their own. That's why so many people lose when it comes to using fair value gaps, because they don't wait for the information. So you have to wait for this to happen. You have to wait for the market to hit into this gap and then reject away. I know it sucks, because, you know, you want to be in every move, but once you wait and then you get this information, that is how you can trust putting your stop loss right here, right, when it pulls back. That's the narrative, right? I hope that makes sense for some of you guys. I'm not making this up. This is literally how I got funded within 1 week. I got funded with 2 accounts within 1 week. I'm not bragging. I want to help as many people as I can. It's nothing for me to brag about. I still haven't even made a payout this year. But at least I can get funded, right? I'm getting funded with this exact strategy. And I'm getting 3 to 1s. So when you can get a 3 to 1, you don't even have to risk that much. You can risk 0.5%. So for me, I got a 200K account. If I'm risking 1,000 and I can make 3,000 in one day, before you know it, you're going to make 10% on your account. And even if you make a mistake, like we're all going to make the mistakes, right? We're all going to get in before 10 a.m. The market is moving, getting us all excited. We end up taking the loss in here, whatever else, right? The losses are going to happen. It's inevitable. That's why no matter how good you become when it comes to reading price, you also need to know how to manage your risk. So like for right now, for my 200K account, I'm only risking about $500 to $700 per entry right now. And that's because when I blew my last funded account, right, I had a 100K account with Alpha Capital. When I blew that one, I thought that risking a 0.5% was good enough. But the problem with risking a 0.5% is that if you go on a losing streak, you're done. So for me right now, I'm only going to risk 0.25%, at least initially. And then when the trade starts to work in my favor, I'll put on another 0.25%, right? So now I have a 0.5%, and I'm going for a 1 to 3. So, you know, if you can do that 2 or 3 times in a week, and you're going for 1 to 3, right? Think about it. That's what, if you're risking a 0.5%, you'll be up about 3% at the end of the week. That's not bad at all. And then two weeks go by, you completed phase 1. You might even complete phase 2, honestly. But what's more important than that is just knowing how to frame these trades. I just gave you guys 4 examples. We didn't do anything different. And this is what I'm going to do this week as well. And I wish I could, have the time to show you guys all of this in live action. But, obviously I'm still working as well. Right? I haven't got to the point where I'm a full-time trader yet. But I have gotten to the point where I can get funded. I can confidently get funded. I don't even really worry about getting funded no more. For me, I'm at a point where I'm trying to get consistent payouts. That's where I'm at. Right? So we have about $3,000 left to make until we get our payout. And hopefully we can get it this week, you guys. So, and then we're going to look at Thursday's price action. All right? We got 2 more days left. We're going to look at Thursday's price action. Same thing. Let's put it on the 8 a.m. candle. Right? 8 a.m. I'm going to push this back. And then now we're going to put this on 4 p.m. candle, right? Same thing. I'm going to delete these lines because this was for liquidity, right? So the same thing. If this first vertical line right here is our 8 a.m. candle, just imagine that all of these other candles are not even there right now. This is our 8 a.m. candle. So what does that mean? We're going to find the previous swing lows and swing high, right? We have one right there. Right? We have one up here. Same thing. We got a swing low right there. Right? We got a swing low down there, right? And if you want to just keep on marking them out, you can mark this one out too, right? Whatever. So now we have all of our swing lows and our swing highs marked out from the hourly time frame. That's a very important thing to do every day. Every day. I learned this from JCap. JCap, he got a $2.4 million payout with Apex. I don't know if any of you guys have ever bought an Apex account, but those accounts are hard as hell to get a payout with. So if he's doing this, I'm telling you guys, just try it out. At the bare minimum, just try it out. Right? Don't take my word for it. Right? So now, all we have to do is what? Market open. Same thing, right? Look at this. Same thing. We come up here. We sweep this high right there. We sweep that. Let me zoom in for you guys. Right? So we sweep that high, and then what? When that hourly candle closed, what does that tell us? That's a swing failure. Meaning that we swept the swing high, but the body failed to close above. So because the body closed back below, what is that telling us? More than likely, we're going to start going down. Very simple. Very simple. And now, because we're going to start going down, you have targets, right? You have this yellow line right here, which is a swing low. That's a target. You have this yellow line right here. That's another target. Very simple. You don't have to even go to the daily. You don't have to go to the weekly. You don't have to do all of this extra crazy shit. You just go to the hourly, swing low, swing high, mark it out. wait for that candle to close, right? From 9 a.m. to 10 a.m., you have to wait for that candle to close, right? And then all you have to do from there is drop down into the lower time frames. 1 minute, 2 minute, 3 minute, 4 minute, whatever, don't matter, right? You could already see it right here. This is the 5-minute time frame, right? This is the 5-minute time frame. So obviously, right here, I'm gonna put it on, because actually this was the trade that I posted on Thursday, and you guys can go to the live screen. I remember this trade. This was the trade I literally took to pass my phase 2 right here. This was literally the trade I took to pass my phase 2. You guys can go back and watch the video. And the trades are posted on my community tab, right? So, you know, we can go to the 1 minute. Same thing. What do we want to do? We want to find the first presented fair value gap. All right, so let's go to the 1 minute. We're going to find that first presented fair value gap. It's the first fair value gap after 931. Right, so this is the 930 candle, so this one does not qualify as the first presented fair value gap. Technically, it will be this one, but this one is very small, so I will not use that one. I will use this one right here as my first presented fair value gap. All right, so if you're somebody who don't want to wait for the 10 o'clock candle to close, this is the day you could have used the first presented fair value gap to buy this market up and take it to this target. But like I said, I don't do that. So I'm not going to tell you guys to do something that I don't even do. All right? But you guys can see right here, once we sweep this liquidity, all right, we get a swing low and a swing high on a 1 minute time frame. We can use our Fibonacci for that. Right? Price barely can even make it to this order block. The body of this order block is right here. Right? And then the wick of this order block is right here. So when you see stuff like this, price can barely even make it to the body of the order block. What is that telling you? That's telling you that the market is getting ready to go down real fast. So notice how we get the midpoint of this order block, because the wick still counts as the order block, by the way. So we get the midpoint of this wick, and then we start to sell off. Right, so that could have been your first entry right there. Just using the Fibonacci tool, nothing fancy. We waited for the market to give us what? A swing high on the 1 minute. We had our swing high, we had our liquidity sweep. Then we waited for the market to give us a swing low, and all we had to do was wait for the market to come back into a premium, find the trade. Right? And if you don't like the way this market look on a 1 minute time frame, remember what I said. You can use the 2 minute time frame. Let's see how it look on the 2 minute. Right? Nothing really there on the 2 minute, right? I like the 1 minute a little bit better in this scenario, but let's just toggle through. Look at the 3 minute. Nothing on the 3 minute, right? So in this case, I would honestly just use the 1 minute. But I just always have to remind you guys that, because sometimes you might not see it, and that's why so many people miss trades, because you might not see it on a 1 minute. You got to toggle through sometimes. That's ICT teaches that. I didn't make that up. Right? And then all you have to do from here, let's say you get into the trade. Let's say you don't even get into the trade perfectly. You know your stop loss got to be at this swing high. Right? Stop loss have to be at the swing high, and then you want to at least try to go for a 1 to 3 every time. You should never put a trade on if you're not going for a 1 to 3. So the market gives you this 1 to 3 just off of this one idea. Right? Gives you the 1 and 3 just off of this one idea. Then what did we do? We swept liquidity, and then we started to, bounce around a little bit. But ultimately, what was we doing? We wasn't just bouncing around for no reason. We was building out more liquidity. So when the market came up here, dropped down, we couldn't even get below this swing low. what did it do? It came up here, swept this liquidity, and then sold off. Right? You guys can go look at my live stream. I think it was like 20 minutes. This was the trade that I took. Normally, I don't trade after 11:30, but this day was a little bit special, right? Because I was anticipating this move to happen. So the only thing I did was, as soon as this market swept this liquidity, I waited, right? I waited for all of this to happen. This order block right here gave me a lot of information. So once I seen this order block, instantly, I was inside of the trade. I put my stop loss right there, right? Just like this, I put it at the top of this breakaway gap. This just comes from experience, but this is going to be a breakaway gap, and especially because when you see this order block, you know that this is going to hold price down. So sometimes when it's like that, you don't even have to put it all the way at the top. You could even use that, but I like to be extra safe, so I'll put it at the top, right? And then this was a 6-to-1 risk to reward ratio on this trade, right? And I got out at the bottom. And let me show you guys the reason why I got out at the bottom, right? Because if I show you guys the chart that I actually trade from, right, this chart has much more information on it, right? Remember, we was looking at Thursday's price action. So where's Thursday? Where's that at? Where's Thursday? Okay, that's Friday. Let me show you guys. Where is Thursday? All right, I'm gonna show you guys something real quick. Oh, here go the trade right here. This was the trade I took. So the reason why I got out is because we was going into the midpoint of a new week opening gap, and then we also had a smaller new week opening gap right here that held price up. So that's why that was my target. And the reason why I wanted to show you guys that is because if you don't have these new week opening gaps on your chart, you're not going to be aware of that. But that's why, just as a basic rule, you can go for a 3-to-1 risk to reward ratio on that trade and just be done with it. Right? Every trade I go for, I like it to be a 3-to-1, bare minimum. That have saved me from getting into so many, horrible trades, because there's been times that I've been like, man, I think this is a good trade, but then I put the box on my chart and it's like, oh, it's a 2-to-1. I'm not taking it. All right, I just wanted to show you guys that was literally the trade. I took that trade. I'm not teaching you guys to do something that I'm not even doing. That was the trade. I passed my phase 2 on that trade. It's all on my community post. You can go watch those trades for yourself, right? You can go look at those trades for yourself. And then last but not least, Friday, right? I made money Friday. I posted it on my community tab as well. So let's look at Friday. Same thing. We're gonna put it on the 8 a.m. candle. All right. We're gonna delete this. We can delete all of this stuff. And I hope you guys are getting some gems. I really do. Because, I haven't really got any likes. You guys have been coming in. Y'all ain't dropping likes. I don't know if y'all getting the gems or not. But I hope so, right? So, Friday, 8 a.m. candle. Come around. Same thing. Right? Same thing. We find our swing lows and swing highs. So, we got a swing high up here. Right? We're just looking for the most previous ones. We got a swing low right there. Right, then we got a swing low right here, we got a swing low right here, then we got this swing low. So I made a video about this trade. It was a very short video, but essentially what happened on this day was we had this order block right here, right? We had this order block right there. The market came below. Now notice, this is important because a lot of you are going to get confused on that J-cap strategy, because sometimes you don't see that swing failure and you don't know what to do. Well, let me tell you what to do sometimes when you don't see the swing failure. It's very simple. All you have to do is wait for the hourly candle to close back above a swing low. So right here, look at this. This is the 10 a.m. candle. Look how it closed back above. What is that telling you? That's telling you that we're going to start looking for a buy. Because it's Friday, our expectations need to be low. Right? So same thing. And this is literally what I did. 1 minute time frame. What do? You probably already guessing it. We find the first presented fair value gap. The first presented fair value gap is going to be the first fair value gap after 931. So in this case, this is our first presented fair value gap. What do? All right, we box this up. And then we wait for what? We need to wait for that 1 hour candle to close. So what are we waiting for? We're waiting for 10 a.m. This is literally what I did to make money. I made almost $2,000 on my 200K account, and then I made about $350 on my E8 Markets account. This is literally what I did. Now I'm going to be transparent with you guys. Like I said, I still struggle to wait until after 10 a.m. sometimes, and that's because sometimes I feel like when you know too much, sometimes it works against you, right? But I was taking buys all in here, right? But the best buy happened right here, and I took this buy, right? I took this buy. You guys can go look at the trades. They're on my community tab. I ended up losing on my 200K account because at first I had my stop loss down here. This is the safest stop to use. Why is it the safest stop? Because after we make this first presented fair value gap, then we get this brick green candle to come back up, this low should not be swept anymore. Why? Because we have already swept these lows right here. So if we already sweep these lows on the 1 minute and then we reject away, this low should be protected. So I moved my stop losses up a little bit too early on my Alpha Capital account, and then I did get stopped out. All right, but that was okay because I literally got right back in the trade and made it right back. Right, so we use our first presented fair value gap, and then it's real simple. All we have to do then, if you wait until 10 a.m., same thing, you guys, same thing. Fibonacci tool, we found our swing low. Right, we could even use the overall swing low, overall swing high, right? Bam, we wait for the market to come into a discount zone. Real simple. We use this as our stop loss. We get in right there about around the midpoint of that first presented fair value gap, and then we're going for a 1 to 3. I have literally given you guys from Monday through Friday. From Monday through Friday, it have offered you guys a 1 to 3 every day. So if you're struggling to pass your challenge, it's because you're not doing exactly what I did in this video. I'm not trying to, this is not me being cocky. I learned this from other traders. I didn't invent any of this stuff. I have no problem with giving them a shout out because this stuff has helped me tremendously. All right, and then even outside of the 1 to 3, I think right here, right, this little order block was my target right here. This little order block right here on the 2 minute time frame, this was my target. So it made sense that our 1 to 3 was in the area, and as you guys could see, it blew right on through that. You could have went for even more, but like I said, it's Friday, so I wanted to be safe. I don't want to get too greedy. I went for my 1 to 3, and I'm not even going to lie. I got out way before that because it was struggling, and I can show you guys where it was struggling at on the 1 minute. So right here, I got out. I think I got out. Yeah, I got out about right here. As soon as we broke above this high, I put my stop loss right above this high because it was consolidating on the 1 minute. I wanted it to just blow up there and give me more profits because I had my stop loss at the midpoint. I had my take profit at the midpoint right here, but it wasn't that big of a deal. it would have only made me like an extra $500 anyway. So I was like, whatever. I'm moving my stop losses. It's getting too choppy. I don't want the market to do anything crazy, right? But it gave you a 1 to 3, right? So in this video, let's think about everything that we did, because somebody asked me in the comments below, do I use breaker blocks? I don't use any of that stuff. The only thing we have used in this video is liquidity, right? Swing low, swing high, the first presented fair value gap, and we waiting for that 1 hour candle to close, right? So we're looking for swing failures. That's it. That's it. You don't have to overcomplicate it. Trading is already complicated enough. If you start overcomplicating it, you're going to get smacked. You don't need 1 million trades every day either. You just need a system that's going to, force you to do the same thing every day. And then you have to follow that system. Because I could be transparent with you guys and tell y'all the reason why I blew my 100K funded account, the reason why I blew a bunch of accounts this year is because emotions, not being consistent. That's why sometimes, y'all, I don't even want to start the scream at 9:30 or 9:15, because sometimes when I start that scream at 9:15, I feel like I have to do something. So don't be surprised if y'all start seeing me start to scream at 9:45, because I don't like trading at the opening bell anyways. It's just not good for me. So that's the video, you guys, man. Make sure y'all drop a like. I really did try to give y'all some gems. And if y'all go back and watch this video again, I'm telling y'all, watch this video before you trade this week. Watch the video, study it, do what I'm telling you guys to do, and then come back at the end of this week that's coming up and let me know if it worked for you guys. Let me know. Let me know if it increased your winning percentage. But you have to be disciplined. So that means if this strategy requires you to wait until after 10 a.m., you have to wait until after 10 a.m. Because if you don't, you're going to increase your chances of taking losses. I guarantee it. Right? I guarantee that. So appreciate you guys for hanging around with me. I don't want to be on here all night, but just wanted to do some back testing and show you guys all of the trades I pretty much took this week to get myself funded. Now I'm up about 2,000 on my 200K account. We just need to make about 3 more thousand, then we taking a payout. So hit that subscribe button, hit that like button. Never forget, use code TRUCKIN. All of my links is in the description below. Y'all already know I'm a traditional prop firm type of guy. I like the old school accounts. I like the 2 steps. I have nothing against the futures accounts. It's just not for me. Right? But I still eventually one day want to master those futures accounts. So, I'm still affiliated with Tradeify and Trade Day. Those are, and Lucid Funding. Those are like the 3 future companies that I like the most. But as of now, I'm going to prioritize the 2-step account. So my plan right now is to, once I start getting consistent payouts, I'm going to get max allocated with FTMO. I'm going to get max allocated with FundedNext. I'm going to get, I'm probably going to end up testing Alpha Trader Firm out. I'm probably going to end up testing out the Hola Prime, right? But essentially my goal is to get $1 million in funded capital this year. And and I really want to be consistent with it. So that's the video, y'all. I appreciate y'all for tuning in. I'm gonna see y'all in the next one.